Hello, everyone. Welcome to the third episode of Blockchain Talk. Today, we will be taking a look at the market, and as the title describes, we'll debunk some Bitcoin myths. This I'm doing due to a tweet I follow. Well, I saw on Twitter from one of the guys I follow them, who did a little breakdown with what is considered the issues with Bitcoin and how to implement or make it better available for mainstream adoption. Now, let me start by naturally, yeah, oh, that's wrong. By adding the CoinGecko website here, starting to share my screen. Go. So as you can see on this date, it's noon here in Brussels. It's the 8th of June, so let there be no mistake here. Market is once again bleeding red. Entirely. There are a few green graphs here, but that's technically due to prediction of the last 7 days. So everything once again is a little bit in a downside. Now, I'm going to take a look at Bitcoin. I want to talk about my future predictions here, considering the market. Now, in my two previous episodes, I talked about the market going sideways for the time being, and that I do not expect some great gains, some big movements going on. Now, naturally, I must imply such big movements can always occur. You never know, like Apple suddenly deciding, okay, we now accept cryptocurrency, Bitcoin, for example, then you might see a sudden pop up in the entire value and the market being in an uptick. However, no such events are to occur yet. In the latest news articles I follow and where I keep my eyes and ears on, there's no direct good news for the market to climb out of the slightly bearish market. What I do want to talk about and mention here today, I'm always going to focus in on Bitcoin by reason it still has the highest dominance for the entire market. It sets the tune for the market to march on. We have to still admit that one. In the last 24 hours, it seems we are bearish. However, people will try to highlight the current FUD and create an FUD, so fear, uncertainty, and doubt. If you look at the last 7 days, you'll see the general trend is downward, and they will especially highlight this fall here. However, there's some additional information for more experienced traders. Always look up to the scaling of the graph. You see here, 40,000, 34, 32. There's a difference of 8K approximately. However, we have been around the, 36,000 for some time. In previous episodes, I mentioned that perhaps the true value is sticking at around 37, but it's better to work with a margin of between 40K and I believe I said 35K. We went under it. Generally, I'm not talking about level of between 40 to 35K, 37 in the middle. So in reality, you need to zoom out even more so. So you see here, yeah, there's a dip, but not as tremendous as the previous one when seen over 7 days. Zoom out to 30 days, you see we came from much higher. This is the all-time high, almost a month ago. But we have been going sideways for the time being, and I made that very first prediction. Was it in my Dutch spoken live stream, Crypthusiasts, or even in Blockchain Bros? I can't remember. Where I said I expect the market to go sideways for the time being. It was about, yeah. Now I did not expect the FUD being created by Elon Musk, which gave rise to the dip here. It recovered soon enough, and during this recovery phase, a lot of people saying, "Yeah, let's get back to the moon," and even imploring doing so. However, as you can see here in this graph, we are still going sideways. Yes, the dip is quite low, but we came from there. So I don't know what occurred that, well, invoked this one. Perhaps another tweet from Elon Musk, perhaps one major holding selling off his Bitcoin. I don't know. But I dare say we are still quite on schedule. We're still in the 40 to 30K zone. Zoom out at 90 days. We had a much worse one the end of May, so we're at about the same level. It isn't really bad. However, what I do want to point out here is to make a resemblance. To zoom out a little bit. I'm playing here with the graphs. Now, what I want to mention here is the likeliness of the 2017 and 2018 bull run. We see here small peak, very volatile all-time highs, which we got here. Then we had a major dip before it recovered. Major dip, so corrections before, well, in 2018, stabilized, and then here something occurred, went down, went back upwards, etc. So from what I can tell by exploring the graphs and drawing lines, I'm not going to do it here physically, but it seems the best is behind us. You're now in the phase up here. So this is the dip that was created, so I expect for it to go sideways for some time. I can see here February, March, April, there was also a little dip. So we're probably in this time zone. So we will be going sideways, little dip, little bit of recovery, dip once again, top, dip, dip. So I do not expect for it to go much higher. Now I can always be wrong. Would love to be proven wrong on that occasion, but from what I can tell, the best has already passed. So now everyone who stepped in at a 50K, 40K, or even 60K level, well, you guys will have to wait up until the next cycle in order to see profits. However, do not be motivated to sell your profits. Your earning, not your earnings even. Sorry, to sell your Bitcoin. Keep them around. We are now in a stabilizing phase here. Would love to see naturally a peak going back up, but I'm assuming, and I must admit I made a mistake myself, but I'm slowly turning about from that initial point of view where I thought, yeah, we will be seeing a 100K Bitcoin later on this year, or even a 200K. I always remained prudent and said, well, I wouldn't be surprised seeing, well, Bitcoin reaching the six number, so 100,000 US dollars in value. I'm slowly returning from that point of view. I must admit, I probably let myself a little bit go with the ongoing hype when it was within this phase. So wouldn't be surprised that the best is already behind us for this year. I must admit, I also bought at a few wrong points here, at around about around the 30K level, a big back even, because I had a little suspicion that, well, this would be approximately the level it would flatline a little bit. But I also made a few purchases here at 48, if I'm not mistaken, not on the 50 or 60K. It was somewhere 40K, 30K that I always remained in. So I might be seeing some losses on my recently bought Bitcoin, but that's okay. I know future-wise it will go out eventually and get back up in price. Now, what I wanted to show with this graph here is it seems there's a very strong correlation here that we actually might be in this phase here. A little bit of volatility on the long term before it stabilizes. Now, like I said, I hope I'm wrong, but considering the run we had up until now, I wouldn't be surprised. And actually, at the level we are now at around, what was it, 33 to 35K, that's actually decent value of Bitcoin. We are much higher than the previous all-time high from 2017, 2018. and it seems to me that this might be the correct current value. However, I must note, and I'm going to return to CoinGecko, Ethereum itself will see will provide much liquidity, influx of new money within the cryptocurrency market. By reason, Ethereum will be launching its EIP 1559 later on this month, which will create scarcity for the Ethereum coin, which will drive up its value once again. So Ethereum during this month will probably be the main instigator to attract money within the crypto markets, which implies all ERC coins, tokens, my apologies, and must use correct lexicon here, will probably see an uptick as well, the direct result. Bitcoin, on the other hand, might also profit from it because Bitcoin is still being seen as the dominant coin, but also has a presence on a lot of other blockchains, either in wrapped form or being used as an asset backing the blockchain, etc., etc. So we might see some growth later on this month. However, what I dare say, future-wise, market's going to stabilize. I do not expect big runs going to occur. I'm also admitting and retracting my words I made in early episodes where I think that Bitcoin might hit the six-figure numbers, assuming we will remain within the level 40k to 30k, somewhere there. Volatility. So if you are a professional trader, I dare say set your lowest point to 30k for buying in or selling off, and your highest bid somewhere at 40k, point where you shouldn't be buying. By reason, you will probably make losses by then. So this is my current prediction for the market for the next week, or dare I say month. I dare say month at this occasion. Would be happy if proven wrong that it goes up again, but I expect I'm going to be, straight on to it. Anyway, let's continue to the second part. I mentioned that I was going to debunk a variety of myths. I'm going to base myself on someone I follow called Life Math Money. The guy has a very good Twitter account. I urge you all to follow him. He posts a lot of decent content. However, what I dare say he only, not initially, but recently got himself involved with cryptocurrency. Um, he's educating himself. He made a few free courses about it. I dare say if you're a very, very beginner, you might refer to my courses, but I know this guy has some free content, which is actually quite decent. Read it for myself. Anyway, what I wanted to do is debunk a little bit the tweet here. I saw it passing by on my timeline, made a few remarks on a variety of points, but I want to do it more, with more consideration and with much more information. So let us begin. He says there's a few problems with Bitcoin. Now, I know this will trigger a lot of Bitcoin maximalists, and I must admit, and I'm going to agree with Life Math Money or LMM, there are indeed a few problems with Bitcoin. First, he says there's a lack of privacy. Every time you make a payment, the person you're paying to knows how much money you have. Make a big payment like buying a house, it's likely that it would come from your main wallet. It as the seller knows your net worth. On that account, there are a few things that need to be mentioned. Your wallet has no ID attached to it. This implies it is entirely anonymous. So that implies your wallet is actually very, very private. However, and that's something most traders, those who already use cryptocurrency know, is when you make a transfer from one wallet to the other, that you get actually some sort of key whereby you can verify on a blockchain explorer how much that wallet has in coins. So that's the main reason why it says there's a lack of privacy. By reason, well, the person you're paying to knows how much money you have. More or less true, he knows how much money there is in the wallet you've made the payment with. However, if you are like myself, you have multiple wallets. If you're smart and financially literate, you have a paying wallet and you've got a savings wallet. Paying wallet can be loaded up by the other wallet. And well, in that case, you are already protected. Naturally, oh, made a mistake there. So by making use of different wallets, the other persons won't explicitly know how much you really have. They will only know how much you have in the wallet you made a payment with. To avoid that one, well, simply get two wallets: a simple digital one, simple smartphone one, whereby you make the payments and use the others to load it up if you want to make a payment. Um, best fit and best hint I want to give here: for payments, use a multi-coin wallet. By reason, on that occasion, you can use a variety of wallets to load it up and, well, make your payments. At that occasion, it becomes much harder for others to know which wallet belong, or let's, my apologies, it must be a multitude of them, which wallets belong to you personally and which one will the payments are being made. So use multiple wallets and only one, preferably a multi-coin wallet, to make the actual payment. That account, you guarantee your own privacy, but at the same time, there's a lack of transparency for the others to see how much you have. And then he started to look, this makes it a dangerous currency to use. Yes, everyone can verify your address, that's true. Hence the reason why I say use a multi-coin wallet or wallets to make actual payments, but have others whereby all your assets are individually being used, being stored. So this avoids people knowing how much you have. And actually, he says this is a big problem with Bitcoin or even cryptocurrency, whereas I dare say it is actually one of its strengths. By reason, it offers high transparency. It prevents fraud. It's information needed for the miners to verify if you're not fraudulent. So it's not really a big problem, but this implies he's more used, well, by making payments or being paid in fiat currency, whereby he thinks no one knows exactly what's on his bank account, whereby I dare say any professional bank would know, even government knows, and that's more dangerous than other people. Anyway, imagine that you're running Imagine that you're running a startup, your customers, your employees, your competitors, and everybody else knows how much money you have. It's going. Once again, if you make use of multiple wallets, they won't know. They can figure out the internals of how your business operates from it. Side note here, this implies that the rivals of your company know all about the identities of the other wallets which are linked with yours. With that I mean, well, the producers, the other companies you make payments to, the suppliers whereby you buy your goods, etc., that all their IDs are related to that one wallet. That's not the case. As I said before, all digital wallets are anonymous. The only thing they can see are the various transactions which are occurring, but they do not know from who it comes from. So they cannot figure out the internals of your business. By reason, all else attached to it is entirely anonymous. They can only see the movements within your wallet. Naturally, if you are well spoken and quite loud and transparent about your business, people might deduce a few things. But if you keep silent and say, okay, my business is running great, and they, by some reason, made an interaction with you and got a transfer from your wallet, they might verify the ingoing and outgoing, but they will remain clueless about to whom it is addressed, where it goes, or to whom you make payments, etc. So, yeah, that's a little bit of a non-point. Can know what all Other employees got paid. Suppliers can know whether you have money in your account or not. Once again, all wallets are anonymous. They do not know. Not to mention robbery and attack risk in high crime areas like Venezuela and California. I made a remark here. Well, your cryptocurrency cannot be stolen as long as you don't give away your private key. The guy responded by posting an image. I'm going to quickly look up. Scrolling down a little bit here. So false flag, private keys are the literal key to funds. You cannot get robbed from your Bitcoin. That's me, by the way. Yes, you keep that in paper wallets or hand over your keys. That was his response, and my counter argument is, do you guys even know your private key by heart, let alone all private keys by heart from all of your wallets? You don't. So at best, they can't access it. Even if you say, I do not know the private key and I haven't stored it anywhere, they won't reach it. And even if they do, you will be giving the private key to one wallet, but your other ones remain safe. If you're smart and you're running a business, it will be of your multi-coin wallet whereby you make the payments. They get access to that one, but all your other assets remain protected. So quite safe, even if you hand over the private key voluntarily, but you can lie your way out of it. Quite simple. So he himself admitted you can solve this to the extent by using multiple wallets, but whenever you do regular multiple transactions with people, they can research your wallet's history enough to figure out how much you have, where you get it from, and where you spend it on the account that they know which wallets you owe. And in order to get that, well, they need to have the IDs of the other wallets, which isn't really the case. So debunked already. Ideally, Bitcoin needs to adapt Monero-like privacy technology, ring signature, self-addressed string CT. Digital cash is supposed to be anonymous like real cash. That's true. Monero is a privacy coin. I dare say if you're running a business, it might be wiser to actually opt or adopt Monero for making use of payments. By reading a privacy coin, transactions are much harder to be traced, almost impossible to be traced. Bitcoin, on the other hand, is better kept as an underlying asset to give value. So, for example, you make all payments and receive, all your earnings in Monero. On an exchange, you swap it to Bitcoin, you store it into one of your wallets, and you're safe. So, at that account, they will only get your hands on Monero, and people will have a hard time, figuring things out. So, I must admit, here, is more or less correct. However, it's much easier to take on Monero and swap your earnings than having Bitcoin adopt privacy technology. Plain and simple as that. On the problem, centralization, censorship. Now, that's a myth I encountered multiple times, but 70% of the mining of Bitcoin currently happens in China. Not true. The reality is, the biggest mining pools and the majority of the mining pools are situated in China. Why this subtle difference? Well, a mining pool is where all hash rates from the miners are being aggregated, where they come together. And at that point, it implies that not 70% of the mining is actually occurring in China. No, it is being aggregated, brought together in China. If China, for example, like you mentioned here, power to censor, if someone like the Dalai Lama, come on, there we go, power to censor, like donation in crypto, like he mentioned here, well, the miners can say, okay, I'm going to opt out of the miner pool, I'm going elsewhere, like, for example, a mining pool located in Poland or northern USA or somewhere here in Belgium or somewhere else. Well, this thing won't be true anymore. It's actually a very popular myth being spread by Cambridge University some time ago, where they made a study and made this bold claim. The study in itself is wrong because it went out from a few principles, exaggerated a few numbers, while in reality, if you look up at the setup of Bitcoin, of blockchain, you will see that they did not mention or take into account very fundamental setups of blockchain. And well, I'm trying to search my words here in English because I'm normally Dutch. So yeah, what basically boils down to, they made a few exaggerations here, and not 70% of the mining of Bitcoin is currently happening in China. It's only the aggregation of all hash rates being brought together in China. But in reality, mining doesn't, the majority of it doesn't occur in China. So even if the CCP would implement censorship, well, majority of miners will say, okay, I'm leaving, I'm going towards another pool, and the local cryptocurrency market will dry up. So power of censorship, forget about it. So this entirely is blocked out. He says if someone else went, then a city will not build on top of that block and say it has a 50% share. So here he continues on the fallacy that the majority of mining takes place in China, which is wrong. And he says, well, they have a majority of the hash rate here in China, so we can make changes towards Bitcoin. Even if they do, to perform a 51% attack, considering the high hash rate of Bitcoin, it would be an extremely expensive endeavor to do so. Not only that, otherwise they will encounter, well, worldwide criticism, and the remaining 49% will say, okay, so that's how it goes, we're going to fork, and they will continue a more official Bitcoin, which is more related towards the Western market. And the CCP will say, yeah, but we have the original blockchain because we have the majority of hash rate. But the others might say, true, but there's entire censorship and it deviates from the initial idea of Bitcoin. The 49% at that point are correct and will say, okay, let's continue with the original setup and do not take into account what the CCP does. So from that point on, a fork occurred and transferability isn't possible anymore. Meaning, well, the CCP is being parked on the side and cannot make any gains anymore unless they try to take over the other blockchain, which is different from the one they hijacked with their 51% attack. At that point, they will need to redo a new effort on this blockchain and redirect all hashing rate towards the new one, which is once again an extremely expensive endeavor, both in energy, both in money investment. So it's insane to do so, and it is in their best interest to not censor or try to take over the network, by reason they will be shooting in their own feet. So yeah, here it says CCP becomes the bank. Not true. They will become the bank of the fork they created, and that's it. There it ends, and probably their own Bitcoin, because the majority will say, yeah, well, CCP took over, we're not going to mine on that one. Let's continue on the other fork, on the other chain, which stands independently from the other. Their banking will remain only in China and become void of meaning. So here it says, of course, this product too can be sold by introducing privacy to transactions, more or less, yeah. Reducing supply, doesn't have a fixed supply, it has reducing supply since Satoshi's almost every day. That's correct. That's correct. I must admit that. I myself already lost a few Bitcoin Satoshis. It's not easy to admit that one, but yeah. Lost the wallet. Trying to recover it. Something with a password I've lost, not a seed phrase. So yeah. This means the value of the existing Bitcoin keeps rising. That's fine if it was an asset, but if it's a currency, then it's not fine. I want to make a small remark here. It's true there will only be a fixed maximum supply of Bitcoin being created, mainly being 21 million. However, Bitcoin has extremely high liquidity by reason that it can be divided into Satoshi, named after naturally the group or person behind Bitcoin who developed it and disappeared. I was going, yeah. So can be divided into a Satoshi, which is exactly 100 millionth of one Bitcoin. So even if its value keeps on rising, implies that Satoshi, so the smallest increment of Bitcoin, can be used as a currency. Uh, do 21 million times 100 million, and that's your max supply of Satoshis. Quite simple. I did a little mathematics, and even if one Bitcoin were to equal $1 million, a simple Satoshi would still have 0.01 cent of value in total, which still makes it very fit for being used as a currency. Now, naturally, I went out from 21 million. In reality, it would be less, but it would still remain in the 0.01 up until 10 cents of value, making it still quite fit to be used as a cryptocurrency. But I must admit, it's better to have Bitcoin seen as an asset nowadays and less as a cryptocurrency. Well, as a currency to be used, but it still has the properties and still has the potential to be used as such. So I say it's something which needs to be looked up long term. But I must partially agree here with what he says. There's indeed a reducing supply, there's indeed a fixed supply, and well, the reducing supply due to Satoshis being lost every day. No other way going about it. So, indeed. Now, if people believe that they will keep rising fast, they will be very reluctant to spend it. Being the value of money should be stable, neither increasing or decreasing. That's correct. However, I want to point out that even the fiat money we use nowadays, like the euro, the US dollar, the yen, etc., have no fixed value either. We are only accustomed to thinking it has a stable value. But if you compare, for example, the US dollar towards the euro, you will see quite a lot of fluctuation. By reason, well, it hasn't got a fixed value. Everything depends on how in demand the euro or the US dollar is. And I can even show you this. Nope, wrong one. By making use of Feather. You see 0.01, and they say, okay, it is relatively stable here. It's always at around $1, 2 cents in difference was a major one. If you look at long term, sure, there's one peak here. It's odd. Tether is generally considered a stable coin whose aim is to be equal to $1. However, everything is expressed here in US dollars. But watch what happens when I switch towards euro, for example. You see the graph automatically becomes very, very different, more volatile. By reason, the US dollar hasn't got a stable value, and neither does the euro have. As you can see here, well, there was a little bit of an uptick here in the time period that Trump was president, and downside when was still our beloved friend Obama. Actually, the crash here due to COVID. But as you can see, it's quite volatile. I'm going to zoom out 1 year. That's the crash. A few months, 30 days, 14 days, 7 days. As you can see, this is a very, very volatile coin as soon as you compare it towards another. So what I want to say with that one is, well, even the money you are paying with isn't really stable. So this is actually a non-argument against Bitcoin to say, yeah, well, it hasn't got a stable value because it is as volatile. No, it is as volatile because you compare it towards another coin which has no fixed value. So actually this one busted. So having tail emission to counterbalance lost coins and keep the money supply constant rather than reducing due to locked coins is what should make Bitcoin true currency and not an asset. That's more or less true. Without thinking of its future value. That's also true. So this once again refers back that Bitcoin is better seen as an asset instead of a factual currency. Well, to be used as a currency. However, like I said, it still has the potential to be used as a currency. However, it's much safer to consider it as an asset to hold in your crypto wallets. And this is, well, I'm going to open it up. You guys, free marketing for the guy. So this is his crypto course, neatly written, nice topics, etc., etc. So check it out for yourselves. The link is here, teachyourselfcrypto.com, made by LMM. So he receives additional remarks. So to the people saying Lightning Network, you need initial on-chain transactions to establish payment channel which can be censored. This refers once again to another problem encountered with Bitcoin, which is the transaction times. For one transaction to be saved on the blockchain, you generally need about 10 minutes before it can be saved and verified and validated. However, there exists a second layer solution that's actually, well, some sort of, well, if you imagine the blockchain being one chain, a second layer solution is something which runs parallel with it, and that's the Lightning Network. What does it do? Well, it speeds up the transactions. So it's going to group together a variety of transactions, and such as the fastest pathway between a variety of miners to actually validate and verify the transaction made before it is actually being saved after 10 minutes on the main blockchain. So yeah, second layer solution, like I said, also here I mentioned this, and he said, yeah, but they will need your ID and proven track record from your wallet, so making it less private. Whereby I said, well, on that occasion, if you can't make use of Lightning Network due to privacy issues, do it on the mainstream blockchain. By reason, you will remain anonymous, and you wouldn't. Well, the only disadvantage you will be having is that you will be stuck with the 10-minute delay of the confirmation of your transaction. Because by the Lightning Network, it's much more speeded up within a minute or something. So yeah. China hash rate decline. China is not one entity. Can become the biggest miner. Like I said, aggregating hash rate does not imply it's the same as mining, so debunked already. Have no power. They have power to decide the transactions they get to include in their blocks. They can follow all the consensus rule and still censor you. Yes and no. That's where the majority vote comes into place. A group of miners might say we reject that transaction, whereas the rest of the network says, well, we are going to accept it because there's nothing wrong with it. All comes down to the mining procedure of validation and verification. And technically, they say, yeah, but it can be censored and it can be declined. That's true, but most miners are on autopilot. They pick it up from the mempool, save it on the blockchain, finished. And once it's saved on the blockchain, it can be changed. So this is actually also a non-argument. Say your account has Bitcoin international, you can't spend your Bitcoin anymore. True, but during a war, resources are everything. Bitcoin is but one. There exist other means to continue going to war. So I'm not going to get into that. I just let's go for improvement. That's the article. So yeah, with that I'm going to conclude the live stream here. Move. So thank you guys for watching this. Hope you learned a few things. Yeah, please be considerate of my market predictions, I dare say. I'm going to make the mainstream thingy there of I'm not a financial advisor, so yeah, I'm not a financial advisor. This is not financial advice. However, those are hints on how I'm seeing the market and how it will develop. Like I said, currently Bitcoin value is going to remain stable, going sideways for the time being. I expect to have it fluctuate between the 40K and 30K levels. So with that information, take of it what you will. And the last part was me debunking a few Bitcoin myths on the hand of a tweet from another guy. So once again, thank you guys for watching. Hope you like it, and up until next time.